Hi everyone, Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. Welcome to State of the Market. As I promised last week, this week we're going to take a look at the 3 highest yielding stocks in the market. Now that's not quite as simple as it seems. If you run a screen for the highest yields, you get some ridiculous numbers, and they're not very accurate. Here's what I mean. For example, in this screen, it shows Apartment Investment and Management Company sporting an 84% yield. Now here's a pro tip. Anytime you see yields that are so insanely high, you can be sure you are not going to get paid that high of a yield if you buy the stock today. Now, I'm not going to lie, size does matter.
Oh my.
Now, I'm talking about yields, of course, for income investors. But when you see a yield of 20% or more, there's almost always a special dividend, which is a one-time dividend that a company pays, and as a new shareholder, you won't receive it. But when you screen for high yields, these screeners almost always pick it up. Other times, companies with sky-high dividends have often lowered or even eliminated their dividend altogether, but that is not reflected in the screen either. So for example, this screener still shows Frontline with a 30% yield when in reality, the yield is 0. Frontline actually suspended its dividend going forward, yet the screen still picked it up. In fact, I found over 24 stocks whose yields were mouth-watering, but they included special one-time dividends or the dividends had been suspended or reduced. So let's take a look at the 3 highest yielding stocks in the market that actually have a yield you would get paid if you bought them today. The first one we're looking at is Shell Midstream Partners, ticker symbol SHLX. It's a Houston-based oil pipeline company. It pays 46 cents per share quarterly, which comes out to a fat 16.4% yield. Now, the company's done a good job of continually raising the dividend since 2015. But can the company really afford to pay its dividend? Let's take a look. Over the past 12 months, Shell Midstream paid out $724 million in dividends, but only generated $660 million in cash available for distribution. Now, Shell Midstream is a master limited partnership, or MLP, and MLPs report their cash flow as cash available for distribution or distributable cash flow. It's exactly what it sounds like. It's how much cash the company generated from running its business that can be distributed to shareholders. Now, in the past few years, the company generated more than enough cash to pay shareholders. Last year, it didn't, and that's concerning. So you may receive an annualized 16.4% yield today, but don't necessarily count on it going forward unless the company is able to ramp up its cash flow. The next company is also an MLP, which often have the highest yields in the market. It's NGL Energy Partners, ticker symbol NGL, and it yields a spectacular 15.9%. Now, the company recently cut its dividend in half to 10 cents per share quarterly, and that is the 15.9% yield. Now, this looks like a good move to make the yield sustainable. Here's why. In the first 9 months of 2020, and the company hasn't reported the fourth quarter as of the time of this recording, as of the first 9 months, it had generated $152 million in distributable cash flow. Using the 10 cents per share quarterly dividend, that means the company should pay out about $51 million per year in dividends. So even if the cash flow drops in 2021, it should still be able to afford that 10 cents per share quarterly dividend or 15.9% yield. The third highest yield in the market is OFS Credit Company, ticker OCCI, and it invests in collateralized loan obligations, or CLOs. It has paid a dividend since 2018, so a short track record, but it just raised the dividend to 53 cents per share quarterly, which comes out to a juicy 15.6%. Since OFS is an investment company, we look at net investment income. Now, in fiscal 2020, which ended in October, it generated $5.1 million in net investment income, but it paid $6.7 million in distributions, and that's not something we want to see. And the same thing happened last year when it paid shareholders $5.5 million against just $4.3 million in net investment income. So while the company may continue to pay and maybe even raise the dividend, it really can't afford to. So those are the 3 highest yielding stocks in the market. Only NGL can really afford its sky-high dividend. So don't be dazzled by the big yields. They're usually fake news. When you see a really, really high yield that you're excited about, make sure you do your homework to make sure you actually will get paid the yield that is being promised to you on your screen. All right, thanks for watching State of the Market. I'll be back next week for more income and wealth building ideas. Be sure to check out my free e-letter, Wealthy Retirement. Just click the link below. I'll see you next week.